TheoTrade. This is Don Kaufman. It's July 15th, 2019, and you are watching the TheoTrade evening video. So, it's a summer trading session. The S&P futures finished massively unchanged on the trading session. And one of the things that I really want to point out, take a look at the volume effectively down below. See right over here, that would be July 3rd. Which was a half a trading session. Nevertheless, in today's trading session, we do pretty much the exact same volume as a half a trading session. What do we got today? Absolutely nothing. 70,000 S&P contracts trade. It's light out there, people. However, we're right on the verge of, well, earnings and earnings announcements, which we're going to show you here momentarily. And even more specifically, I want to get into what amounts to what I think is going to be a great trade idea, great trade opportunity in the very near future. With that, let's go ahead and get started. One of the things that I want to kind of highlight has to do with, of course, earnings. Some earnings are starting to emerge. Now, the financials, and for the financials, I'm going to use the pseudo financial over here, the ETF, which is the XLF. In our XLF, we're off about 16 cents in today's trade. The financials are maybe a little bit worrisome prior to, well, many of the big financials releasing in the next 24 hours. Well, today we heard from none other than Citigroup. I mean, Citigroup just ended the trading session completely and totally unchanged. They had over a $2 expected move. What did they do? Nothing, meaning that the marketplace in Citi was supposed to and expected to move. And again, I'm going to take this over to think back. Just show you a little bit about the expected move here in Citi. The entire week was looking for just over a $2 expected move. Effectively on these earnings, though, we got absolutely nothing in terms of movement. However, tomorrow morning, well, we're going to hear from the big bank, JP Morgan. JP Morgan, you're looking at just shy of about a $3 expected move. For the record, I'm carrying a bearish position inside of JP Morgan. You're also going to hear from the likes of Wells Fargo and Goldman Sachs, all coming out. Again, all coming out tomorrow morning. So bank earnings are upon us. The XLF is showing a degree of weakness. But with these bank earnings, one of the things that I think is important to kind of grasp, there's not high expectations of movement around bank earnings. Effectively, what I'm saying is if you take a look at a product like Goldman Sachs or example JP Morgan, couldn't have been a better stock to talk about than Jamie Dimon and JP Morgan. But if you take a look at this, the 4-day option implied volatility is just shy of 28. Okay, a week later, the volatility is not that much lower. What that's an indication of is that, well, risk isn't really heavily around the idea of earnings. I mean, listen, there's not that much guesswork over here. Let me see. Investment banking is going to be a little bit slow. Net interest margins are going to be a little tighter, yada, yada, yada. And so the thing is, inside of the banks, what the street is looking for is guidance moving forward. Listen, we all know interest rates now. Interest rates, they're not going up anymore. And with interest rates not going up, well, you got to be a little nervous as it pertains to those financials. And the financials, I mean, this is really one of their first kind of down days in quite some time. But how much of a down day is it where there's just not a lot of liquidity behind it? Nevertheless, tomorrow morning can prove to be insightful regarding not just the future of the financials, but of the broader market. As you guys know, the financials, they hold a lot, of weight and really the keys to where the next move happens to be inside of the S&P 500. With that, I'll reiterate a call from this weekend. Was specific on Amazon. My expectations here in Amazon are kind of coming to fruition, and that is Amazon, we mentioned, is very likely to tag into the all-time high. I mean, when mentioning this, and the reason I'm mentioning it again and again is we were just at 2,000. Why not, take a shot for that 2,050 and then some. It's Prime Day right now. But again, every expectation that Amazon is very likely to crack into all-time high kind of territory. All right, now earnings. Okay, in terms of earnings, what else do we have this week? Well, we are going to hear from the likes, again, of Netflix, and I'll bounce this out another day or two here in terms of my little earnings scan. And by the way, in this scan, all I'm doing is scanning for weeklies. Those are stocks that have options, and those options have weeklies on them. Okay, something like the idea of like Amazon. It's got weekly options. So when I scan for stuff that has earnings, I'm scanning in the weeklies because it's indicative of a bit more liquidity, right? So stuff that's got weeklies, I'm about 4 days out. You can see later in the week, of course, we've also got Microsoft. Other than the banks, Netflix, maybe Microsoft, I push this week aside. Okay, IBM isn't exactly going to be a market-moving event these days. All right. Enough of earnings. We will cover some earnings and earnings-related trades live in the TheoTrade chat room. Now, on to another major front. One of the things that's been a real standout in a lot of recent trade, to me specifically, has to do with the percentage gains. Well, for example, in something like the spiders. Now, I've kind of mentioned this briefly in some recent videos, but here's the spiders, which were up roughly 20% on a year-to-date basis. Again, this is all year-to-date basis. Here happens to be none other than the NASDAQ, the QQQ, up 25%. And last, but definitely not least, let's actually pop in the IWM, which is the Russell 2000, up 15%. There is just this gaping divergence, okay, between your major indices. Now, I'm not here to call like this is bullish or this is bearish, but I am here to tell you that looking at something like the Russell versus the NASDAQ can be a really advantageous trade. And you're like, well, how do you do that? Well, one of the things that I'm going to do right now, so I'm just going to describe to you specifically what I look at, okay, in terms of these trades. One of the first things, okay, I'm going to bring up a comparison chart. Now, volume, it just doesn't play a role in here, so I can actually come in here under equities, hit apply, hit OK. I just turned off the volume completely. One of the first things is, okay, I want you to look at what I'll term visual, okay, divergence. Effectively, all that I'm saying is, hey, okay, in the eye test over here, this is way above this. But most of the time, they move in some relative tandem motion. So it doesn't matter whether you're bullish or bearish. Okay, the idea is this will eventually, like what, converge with this. The two will eventually pair back together. Now, if you can actually look at this in a multitude of time frames, you can pull this up over 3 years. You can see the divergence is massive right now. Okay, but they have actually converged in any decent bout of volatility. These two products have effectively converged. This is on a 1 year. Obviously, you can see a little bit of a convergence over here. Okay, we can even take a tighter time frame, all right, where they're once again divergent. Now, I'm going to snap back to like that 1 year chart. That's just looking at, again, as I said, on a visual basis, you're like, okay, one's really, up, the other one's down. In fact, interestingly enough, when you start looking at this chart like on a 1 year, everybody's like, oh man, the market's up huge this year. Really? Because this year is defined by a line right there, okay? But year over year, the Russell's actually down almost 7%, okay? And the QQQ, it's only up about 8.3%. Just wanted to throw that out there. Now, what kind of a trade idea? Once again, this would be where we're actually going to pair two major products together. And I'm going to cover that, okay? I'm going to cover that in some detail in the days to come. Now, with that, I don't just stop there, okay? Some more detailed analysis, okay, brings me to this little monkey right here. Now, let's not worry about the QQQ minus the IWM. One of the things that I've actually done down below here is what we call a pair correlation, Effectively, okay, by putting in one minus the other, I've actually built, okay, a correlation, right? What does that really mean? Okay, it's a correlation coefficient. Now, what it means is if you have a correlation of 1, it means effectively, okay, they're the same thing. They're moving at a rate of like, 100%. That means one moves up, the other one moves up in perfect relative tandem. Now, most of the time, you can see that the QQQ and the IWM are heavily, heavily correlated to the tune of north of 80% correlation. Once in a while, they'll break from those correlations. No question about that. However, okay, the real question is how broken apart is this particular pair? And that's answered by this, okay? This is actually a pair's standard deviation, okay? And it's one of the things we look for is when you take a look at this. And by the way, right here, okay, we can call this the median, the mode, the average. I don't want to get too much into the mathematics of what we used for the pair's standard deviation. For those of you that are TheoTrade clients, this is actually a study that is readily available to you. Of course, you can open up the script and have a look. But right here, this would be one standard deviation, and out here, which of course is highlighted, okay, that's two standard deviations out. Now, two standard deviations, that to us is a trigger for a trade opportunity. And you can see anytime in the last year, we haven't been out to two standard deviations. In fact, you can open this up even over like what, okay, this is a huge 3-year period of time, only for a brief and fleeting moment, some heavy volatility were we this far outside of the norm. Right now, we're even further outside the norm, okay? Therein lies an opportunity. And again, I want to reiterate what that opportunity breaks down to. It's not just about bullish or bearish, okay? It's about trading the convergence. I mean, for example, here we have the IWM. It could go down. Well, as long as the QQQs go down faster and the two converge upon one another and the trade is set up right, that can be profitable, right? But on the flip side, let's say that the marketplace doesn't go down. Let's say that the marketplace actually rallies. So if the marketplace rallies, you would just hope that here, okay, the IWM would rally just a little bit faster than the QQQ and that the two would converge. It's all about a convergence, not per se about direction of the marketplace. With that, again, I will be constructing this particular trade a number of different ways live in the TheoTrade chat room, both Tuesday and Wednesday throughout the course of this week. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.